Hi, this is Paul from globaltradingsoftware.com, and this is a oil futures trading tutorial. I'm using the ThinkorSwim platform and the range breakout trading indicator with the BIAS Depth Heatmap for confirmation. This is very important. We've got a range defined, but when we get this first range at the oil pit open, we've got a big green candle, but the bias for the range is yellow, so we do not take the long. Also, when we look down here on the BIAS Depth Heatmap, we're mainly yellow there. So this is what we call neutral bias. So there's no real sort of bias to the downside or the upside, so we ignore that trade. However, when the price action starts to come back through that range, after this big red candle closes, the range turns red, so we're looking for a short. We then look for confirmation. Look at this candle here, it doesn't break the low of the range, but look down below where I am here. All 6 time frames, which are higher than this current time frame, are bearish. Therefore we have massive bearish bias. We are good to trade 2 ticks below the low of the range. So 106.82 is the low of the range, 106.80 is the entry. Look at this 50 tick move here right at the bottom of this previous pivot, so that's a good target for that. If you are looking for 50 ticks, $500 on oil, fantastic. Again, what we usually see when we break out of this, it comes back to test into that range. We now look at the manager as we're pulling back onto this range where sort of average volume, lower than average volume, running out of juice, and then it pushes down again. This is the 100 tick mark. That's $1,000 per one contract. We now look to manage this with the manager. The manager is set to aggressive, day trading aggressive. As long as this remains red, this ribbon, we stay in the trade. We're at 150 ticks right now. What we can do is adjust our stop to lock in profit. For me, I think I would right now, if it was me, I would lock in 50 ticks. So I'd put my trading stop here where that 50 tick profit was. That's where my trading stop would be right now. Got to wait for another pullback. The manager's telling me right now though, this down candle was higher than average volume. This down candle was higher than average volume right now. So there's still a lot of bearish momentum to go to here. So the next thing, if we see this 100 tick arrow here, is just above this this wick. What I'd like for this candle to close on the 5-minute time frame, because we use the 5-minute for oil range breakout trades. That closes, we then go very aggressive and lock in 100 ticks for there, and then so on and so forth, and we can probably go 2 candles behind if the price action continues to go down. But this is there we go, the candle's closed, so what I want to do right now is lock in 100 ticks just above the wick of this candle here. If it comes back and breaks, I take $1,000 profit, no problem whatsoever. The thing is not to panic. If you are going to take a standard 40 to 50 tick scalp every time it breaks out of the range and you've got the bias and it goes with you, then be happy with that. If you want to be more conservative, use the manager. And this is how we're developing the auto trader for the range breakout, which will be for the NinjaTrader platform. This is the actual ThinkorSwim version of the trading indicator range breakout. Down below is that confirmation from the BIAS Depth Heatmap. And then we've got the manager to manage the trade. So very, very simple. Look, it's still going down more now. So about 150 ticks, $1,500 profit on this range breakout trade. Great trading opportunities. We just have to be patient. The indicator defines the range. It defines the bias for the range, and you can see that changes from yellow to green to yellow to red. Again, once we get there, we use the BIAS Depth Heatmap to give us the confirmation. 6 time frames, all red, all bearish. This is good to go. We go for the breakout, and then it's down to you what to manage. Are you happy with 50 ticks, or do you want to let the manager take over and look for moves like this 100 150 ticks. So there are some great opportunities there and a great set of indicators. Check out the links below this video for the range breakout, the manager, and that BIAS Depth Heatmap. Remember, signal confirmation management, very, very important. With these training indicators, you could probably trade this oil range breakout like this probably 3 or 4 times a week. Very, very good, very simple. It works for gold range breakouts, indexes, other metals. We see copper on that gold pit opening, very, very good. But oil for me is it's brilliant. It just works extremely well, and it's very, very simple. And there's continuous trading opportunities during the day. If this reverses and comes back through this opening range and the bias turns green and we get confirmation down the bias depth heat map, I'll go long outside of that range. Let's just have a quick look if that did actually happen previous day's range, and it did. You see here, we come back up through, we turn green, all the bias depth heat map is green, we get a nice 50-60 tick scalp there. Very, very good. And then look what it does. It comes back through that range, comes down, it's red, bias depth heat map, 5 out of 6. Is that enough for you for a 50 tick scalp? Absolutely. 50 ticks there, 50 ticks here, 50 ticks there, 150 ticks during the day, yesterday. So again, very, very simple. Everything's done behind the scenes for you, defines the range, defines the bias for the range, then use that bias depth heat map for confirmation, and then manage to manage the trade.